Taxes can be confusing, but they don't have to be. If you're a parent or guardian, you might qualify for tax credits that could significantly reduce what you owe, or even boost your refund. Let's take a closer look at the key tax credits and other details you need to know for your 2024 federal tax return. First, let's clear up a common question. What's the difference between a tax credit and a tax deduction? A tax credit directly reduces the amount of tax you owe. For example, if you owe $5,000 in taxes and qualify for a $2,000 child tax credit, your tax bill drops to $3,000. A tax deduction, on the other hand, lowers your taxable income. So if you earned $50,000 and claim a $1,000 deduction, you're taxed as if you made $49,000. Credits are usually more valuable because they give you dollar-for-dollar savings, while deductions depend on your tax bracket. Let's start with the child tax credit. For 2024, you can claim up to $1,900 per qualifying child. Here's what you need to know. Who qualifies? The child must be under 17 at the end of the tax year. They must live with you for more than half the year. They must be your dependent and have a valid Social Security number. Refundability. Up to $1,700 of the credit is refundable, meaning you could get money back even if you don't owe taxes. Income phase-outs. The credit begins to phase out if your income exceeds $200,000 for single filers or $400,000 for joint filers. Next, we have the Earned Income Tax Credit, or EITC. The Earned Income Tax Credit is specifically designed for working families. This credit depends on your income and the number of children you have. Here's the 2024 breakdown for income limits. For one child, your income must be less than $49,084 for single filers or $56,004 if married filing jointly. For two children, the limit is $55,768 for singles and $62,688 for joint filers. For three or more children, the cap is $59,899 for singles and $66,819 for joint filers. This credit is fully refundable, meaning if the credit exceeds your tax liability, you'll get the difference as a refund. Next is the Child and Dependent Care Credit. If you pay for daycare, after-school programs, or even a babysitter while you work or look for work, this credit is for you. This credit helps parents offset the cost of childcare while they work or look for work. Here are a few key points. Eligible expenses includes daycare, after-school programs, or even in-home care like a nanny. The provider cannot be your spouse or another dependent. Percentage of expenses. You can claim up to 35% of $3,000 in care expenses for one child, or $6,000 for two or more children, depending on your income. That's a potential savings of up to $2,100. Income phase out. The percentage of eligible expenses you can claim decreases as your income increases, with higher income households receiving less benefit. Keep in mind, this credit isn't refundable, but it can still reduce your tax bill significantly. For families who adopted a child in 2024, the adoption tax credit is available. You can claim up to $16,810 per child for qualified adoption expenses like court costs, attorney fees, and travel. If you receive adoption benefits from your employer, you can also exclude up to $16,810 of those benefits from your income. If your modified adjusted gross income is more than $252,150 but less than $292,150, you will receive a reduced tax credit. If your modified adjusted gross income is $292,150 or more for the year, you are not eligible for the tax credit. Going forward, the amount of the credit will slightly increase each year because it is based upon a cost of living calculation. The numbers that define the lower and upper limits of income eligibility also will fluctuate since they are based upon current cost of living. One of the amazing things about the federal adoption tax credit is that eligibility does not depend on whether an adoption attempt was successful. Indeed, expenses incurred with an adoption attempt of a specific child, whether successful or not, may be reimbursed through the credit. The IRS allows you to treat these adoption expenses in the same manner as expenses you paid for an adoption that was not finalized by the end of the year. However, in an international adoption, the adoption tax credit can be claimed only if the adoption is successfully finalized. This credit is non-refundable, but any unused amount can be carried forward for up to 5 years. Here are a few filing tips to make your tax season smoother. 1. Organize your records. Gather all documents, including W-2s, childcare receipts, and your child's social security number. 2. Use tax software or a professional. Many tax software programs automatically calculate credits based on your information. But if your situation is complex, consider hiring a tax professional. 3. File early. The earlier you file, the sooner you'll get your refund. And it helps avoid delays caused by identity theft or errors. Understanding these credits can make a huge difference for your family's finances. Don't leave money on the table. Make sure to take advantage of every benefit you qualify for. If you still have questions, leave a comment below and I'll help guide you. Thanks for watching, and don't forget to like, subscribe, and share this video to help other parents save this tax season. See you next time.